Hello, everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind, as always, that there are risks involved with each trade that you take. You want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we simulate a trade or two. And also keep in mind that what we cover is not meant to be taken as financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the WebTrader platform, which allows you to trade on both MT4 and MT5 accounts, but with some advanced functionalities that you don't get from those platforms. And the same functionalities we use in this session in the WebTrader are also available in our mobile app. Now, as you log in here in the upper right corner, then you'll find yourself in the WebTrader platform. Now, before we get started, taking a look at today's fundamental news and then some charts, it would make sense to talk a little bit about the backdrop of yesterday's fundamental news. The big storylines yesterday really were one, still some tensions with a tit for tat back and forth tariff situation between the US and Canada, and also now the US and the European Union, with tariffs and counter tariffs being put in place on one side, then the other side. So this is creating some tension on the markets. Now, the other big story yesterday really was the CPI data out of the US. This is the Consumer Pricing Index. And if we go to the economic calendar, we can look at the data that came in yesterday out of the US in particular, because it was such big news and maybe unexpected news as well. The numbers that came in here out of the US, and really what we're focusing on is the inflation rate right here. Okay, so the inflation rate year over year was expected to drop from 3% maybe down to 2.9, and continually before the Trump administration came in over the past several years, the expectation to go down many times was not met, and creeping down under 3% and into the 2-point-something% range just wasn't happening. Whether it's because of changes made by the Trump administration, cutting spending in different areas, whether that's the reasoning why the inflation rate finally came down further or not, can be speculated on. Trump is trying to take credit for this, but in any event, the inflation rate did finally tick down, and it ticked down lower, more than expected. And so it finally got under 3%, the 2.9, and actually below that expectation, it came in at 2.8%. And you might not think that that's a big deal. What's the big deal? Is dropping from 3% to 2.8 or 2.9. That's actually quite a big move from 3% to 2.8. Okay, if you say 0.3 would be a 10% drop, right? 0.3 would be 10% of 3%, and it dropped 0.2. So not 10%, but it dropped a significant amount when you look at it in those terms. And so a drop from 3% to 2.8 was cheered by the markets, and you can look at it month over month as well, dropping instead of from 0.5 to 0.3, which would have been a big drop. It dropped from 0.5 to 0.2. That's getting near no inflation month over month. So that's a huge cut, dropped by more than 50% from 0.5 to 0.2. So huge numbers in terms of inflationary data yesterday out of the US. And almost immediately we saw the markets cheer that after some initial bouncing around. A lot of the markets rose up dramatically, then capped themselves because of the tariff fears. So if not for the tariff fears, we'd probably be at all-time highs again on these major indices. But because of the tariff war situation brewing and maybe even escalating, the happiness about the low inflation data out of the US was kind of muted at near the end of the day because of the inflation, the tariff war fears. Okay, so that's the situation. That's the backdrop coming into today's economic calendar. Okay, so now if we look at today, what's coming in, we already had some data out of the European Union and UK. Nothing really major or unexpected. Maybe inflation showing a little higher than expected in some areas. We see here coming in instead of 1.6 at 1.8, but still showing a drop. Here, raising month over month from negative 0.8 to higher than expected. So this data maybe not being cheered in some of the areas out of the Eurozone. Now, what we have left then today are some big announcements out of the US and Canada. Okay, kind of perfect if you're trying to trade the volatility, because there's a lot of volatility between US and Canada right now with the tariffs. Okay, and who knows what the next headline might be. Within less than, I think, 12 hours, Canada imposed 25% tariff on electricity coming out of Canada into the US. And then after a pushback, raising tariffs even further from the US onto Canada, and I believe it was from 25% to 50% on steel and aluminum. Well, then Canada agreed to lower, to eliminate that energy tariff, and then the US lowered the tariff back down to 25% from 50%. And this happened all in the course of a few hours, I think. So anything like that could happen. So fundamentally speaking, with the tariff situation between US, Canada, US, European Union, the US and Mexico, the US and China, and pretty much the US and the whole world, have your trade sizes and your exposure levels with stop loss, etc., have yourself covered in that regard. I mean, you always should, but especially now with what's going on. But as we look right now, nothing new popped up yet today in the tariff situation that I've seen. And so now we're looking at data coming in out of the US, PPI data, that's inflationary data for the producer prices, and jobless claims, initial jobless claims out of the US. These announcements are at the same time. And I've already gone through and studied a bit these announcements in terms of the past movements, when these numbers come in above expectation and below expectation. And what we see is the PPI data is non-directional based on whether these come in above or below expectation. What I mean is you get like 50-50 movements up and down. There's no statistical significance that I see that's very strong. And that's because this data typically comes in at the same time as the jobless claim data. Okay, so if we look at the jobless claim data as opposed to the PPI data that comes in at the same time, it seems to be the larger focus when these announcements come in all at once. So when I take a look at initial jobless claims using the volatility tool here, what we end up finding, and a lot of times I like to look at the JPY pairing, a bit more volatility with it, and sometimes even more predictability. USD JPY, 4 hours after the event, if the initial jobless claims come in worse than expected, meaning higher than expected, above the forecast. Remember, we're talking jobless claims. The higher that number is, the worse news that is. So if it comes in higher than expected, bad news, we see 75% of the time, the yen strengthens against the US dollar. The yen is a safe haven currency, makes sense. Bad news out of the US on jobless claims, meaning coming in higher than expected, USD weakens, yen strengthens. 75% of the time with these past announcements. Okay, and we're looking at 75 pip range movement. That's after 4 hours. Okay, what happens in the first 5 minutes? Okay, same thing, 75% down, but look at the range movement. Only 9 pips, 9.5. So you have time to place your trades, is what this is showing you. And it doesn't take 5 minutes even to place a trade, right? So you have the order window open, you're ready to buy or sell. Then if the data comes in above forecast in the first 5 minutes, it shows that you typically have less than 10 pips movement. And after 4 hours, the range movement on average is 75 pips plus. Okay, we see here's 50 pips. 2 out of 3 hit 50 pips. One of them went over 90 pips. And the smallest movement was 20 pips. And all of them were less distance than that in the first 5 minutes. Okay, we're looking range movement, 9 pips or so, 10 pips. Some of them maybe a little over 10 pips in the first 5 minutes, but after 4 hours, on average, much further movement in the direction 75% down. Okay, so what if this comes in below forecast? What if it's good news? Less jobless claims. Look at the opposite movement, 75% up. Okay, so there's what feels like a direct relationship here, that when the jobless claims data comes in, it's driving the movement 75% of the time up when the news is good, when jobless claims are below forecast, and 75% down when the news is bad, when it's above forecast. And in each case, the range movement over 81 pips here, almost 82 pips after 4 hours. In each case, in the first 5 minutes, the range movement is much less. Look, 18 pips. Here's the 20 pip line right here. Almost all of them below 20 pips in the first 5 minutes. And after 4 hours, the average range movement, almost all of them above, if I draw this line here, all of them above 20 pips. And some of them as high as 91, 92, 80 pips, okay? So you have time, after 4 hours, you have a much larger movement, most of them in this direction. And in the first 5 minutes, and again, it doesn't take 5 minutes to place a trade, you could get in before it even goes 20 pips. Okay, some of them even going down in the first 5 minutes before potentially going up. Okay, so short stop losses, longer take profits, 75% of the time in the past, you'd have been winning in the buy direction when it comes in below forecast, and the opposite when it's above forecast. Okay, so very easy to put together a trading strategy with this type of analysis. That's very simple to do. You don't have to check the charts back a year looking at all the movements to try and figure out how did it move over the past year with this announcement. You have the data right here. Okay, it's a tool that can very quickly give you a lot of information. And this type of trading, we can call it data-driven trading. But the point is here, we're using fundamental news to drive your directionality of your trading, and using the data analysis in the past to decide that directionality. Okay. Any questions, comments on how to use this tool or strategize with it? And what I would suggest is you check out over the weekend for the upcoming week, just like we did, which announcements look like they have the strongest percent probabilities based on past announcements, and have a schedule for the week. You can go through each day and check. I can check tomorrow's, I can check the whole upcoming week and see which announcements. Industrial production out of Great Britain's a high level announcement. We could check that and see what kind of movement and predictability it gets. Wholesale prices out of the European Union area, out of Germany, Spain, etc., inflation rate data. You can check all of these each day of the week and see which ones give you the best predictability. Okay, and yesterday's CPI data would have been another one. It's tremendous data on that one to trade after you see what the numbers are, with high probabilities from the past of what direction it could potentially go based on those numbers. Yeah, I don't see any questions popping up, so I'll move forward to another tool that you can use for your fundamental analysis. So I just want to check on a trade real quick. This is a gold trade from yesterday's session, and looks like it's doing well. We put AvaProtect on this one, I believe. We look at the information. Yep, AvaProtect was a pretty small cost, less than 1% of my balance cost for the protection. It looks like it's not showing me the updated data right now, but I've got protection through tomorrow on that trade. And so it'll be interesting to see how this turns out. But the trade is off and running quite well here, kind of risk-free at this point, other than the cost of that protection. Now, the fundamental news behind that gold trade, by the way, was the CPI data yesterday. Why buy on gold with that CPI data? Lower than expected inflationary data increases the likelihood that the U.S. might be ready then to cut interest rates again, finally. Okay, they were holding off on lowering the interest rate any further in the U.S. until inflationary numbers improved further. And so they improved in a big way yesterday. So many are anticipating maybe soon the U.S. can cut interest rates again, maybe at the next FOMC meeting and rate decision. And that tends to make the markets happy and weaken the U.S. dollar and, cause commodities such as gold to be able to more easily rise against a currency like the USD in a general sense. And so if there's fears about a weakening currency, many times gold is a safe haven some will go into. And that was the rationale fundamentally yesterday with that gold trade. Okay, so what I'm looking at then is another tool that we can use for fundamental trading within our platform so that you don't need to go to other places. Everything's kind of here for you, is the market buzz, okay? Market buzz is found in the discovery section, just like the economic calendar. And what's trending the most is in the biggest circle in the pictogram, okay? So Tesla is trending the most. So let's look at it and see why. I know Tesla's been in the news a lot the past few days. The left in the U.S. is unhappy with Elon Musk, whom, by the way, used to be a Democrat, lifelong Democrat, voted Democrat most of his life, but he was turned off by the policies the past 4 years in the U.S. With the open borders and some of the ideologies that have been pushed of late by the what they call, I guess, the far left in the U.S. That kind of took over the Democrat Party a bit. And a lot of Democrats have moved away from that, including people like Elon Musk, to go to a more pro-business conservative route. And so the left, I guess understandably, is upset with him. They feel abandoned by him. And so are attacking now the Tesla dealerships. Who's funding those organized events and protests? There's speculation about who might be doing that. But some Tesla dealerships were attacked, Teslas were burned, some violence going on, and some threats against Elon Musk's company, etc. So there's a lot of negative news and pressure right now when it comes to Elon Musk and Tesla. And now we see a bearish prediction on Tesla, might drop up to almost 20%. We see the technical analysis behind this prediction and where they think it could fall to price level wise, and the fact that there's no support level showing in this whole image here. So it looks like Tesla is expected to be on a bit of a free fall, and that's the technical prediction. The fundamentals behind that, Teslas are more expensive than the gas-powered cars. Okay, in general, the electric cars are more expensive. Many in the U.S. and around the world are in a money crunch. The inflation has gotten to them. They're looking to buy maybe less expensive vehicles. Also, the fact that the people who were most likely to buy the electric cars were the folks on the left who cheered Elon Musk in the past as a green energy guru. And now that they're unhappy with him and his company on the left, that was his strong audience, so to speak, for his electric cars. It seems like they're going to protest his company and maybe go elsewhere for their electric cars. And so that's creating maybe some bearish pressure on his company as well. And all politics aside, it's supply and demand. And if the demand has dropped from those who typically were the ones giving the demand for that product, that doesn't fare well for the company. And there was an interview yesterday of Elon Musk I saw where he said it's really hurting. What he's trying to do with his Doge initiative, as they call it, to cut out government waste in the U.S. and working with the Trump administration, he says it really is hurting his wealth. He's ultra wealthy, so not in a way that he's going to feel it, but it's hurting his companies in general, and specifically Tesla, the initiative that he's trying to do for the U.S. So he's taking a shot in the arm, so to speak, taking one for the team, as the value of Tesla has been pushing down with his main audience, maybe his main consumer area in terms of the market pushing against him and even physically attacking his dealerships. Now, we can read the headlines here to read about what is going on. And so here's an article. Trump says violence against Tesla is domestic terrorism. I think they're labeling it that because they're going to go after these folks to arrest them. Elon Musk claims that George Soros, Reid Hoffman, Herbert Sandler behind the Tesla protests, gets angry one-word agreement from Fortnite maker CEO. So you can read these articles. This is real life stuff that's happening with big money funding these groups that are out protesting, attacking the Tesla cars, etc. And these are groups that used to love the green energy electric cars. So it's a total 180-degree turn with what's going on politically against Elon Musk, and now specifically they're trying to harm his company. And probably protesting buying his electric cars anymore. And so as we go down, we see other articles. JP Morgan slashes Tesla's PT to street's lowest, citing worst quarterly deliveries. So deliveries are really bad for Tesla for the past quarter. JP Morgan slashing their price expectations. If you read these articles, they're all negative pretty much about Tesla. So the fundamental news is telling you here why that technical signal might make sense. So sometimes you read the news and you can read the whole articles and make up your mind for yourself. Don't let me make up your mind. Read the articles that have come out. This one just came out 3 hours ago. Read the most recent articles about whatever it is you're going to trade on so that you know the latest fundamental news. And then take a look at the technical signal. And then you say, the technical signal looks good from a technical perspective. There's, the support levels are way down low. It's in a downtrend. The signal looks good. And then when you look at the news, if the news backs that signal up, then maybe you make the trade because you have more than one reason to think that maybe this prediction could be accurate. Okay, so very easy to do a lot of research in a short period of time using the market buzz area and also get a technical signal at the same time with the trend analysis outlined for you. Okay, so this area is a trading strategy in and of itself, combining the technical analysis with the most recent fundamental news to see if you want to trust the signal coming from Trading Central. And this is how I suggest you use our signals. Combine the signal, don't just blindly trade on the signal, because you should check what's the latest fundamental news to see if that news coincides with that signal. Does it make it more likely to occur or does it work against it? If all of these articles were good news about Tesla, saying Tesla has the best quarterly results, etc., then I would not trust this signal. But because all of what we're reading here, and you should go through and read more articles for yourself, if all of that supports the idea that Tesla might fall, then maybe you're more likely to make this trade. That's the point, okay? And that could and should improve your success rate in following the signals that you find on our platform. You can find the signals within the market buzz. You also can find the signals just by looking for this symbol within the platform. This symbol means there's a live signal on that instrument. And you just click on it and you get the live signal right there in the order window. Okay, so you can look at the signals here with live movement on the chart, and you can also, from the market buzz, while you're looking at the most recent news on whatever it is you're going to trade on, from the market buzz, see a snapshot of the signal from the past, from when it was first generated. So this signal, when we click on it here, that's a still snapshot. Okay, it's not moving, but you get the idea, the general idea of the signal here. If you want to see the live signal, you go to where and pull up Tesla, obviously. I'll just click on this one, but you'd pull up whatever it is you want to look at the live signal, and then you see the live movement and where it is, the live prices compared to where the take profit suggestions are. Okay, and you know, if this one breaks below the pivot line, by the way, then that means the buy signal is off. If it breaks below the pivot line, this buy signal would have gone bad. And what it says here is the sell scenario is if it breaks below that pivot line, then it suggests that you sell. That's the sell scenario and buy scenario situations. So that's the technical side of it. But for Tesla, we need to wait till the US market opens. Then you look at the chart. And we can do that, by the way. Let's do a quick look at Tesla. And I'll just pull it up actually down here. I do see a couple questions came up. Yes, some of these features, you need to fund your account for all of the features that I'm showing you to be active. Some of them are active without funding, but you just need to have a funded account, and then that unlocks all of these features that I'm showing. So you could fund the account but not trade. You don't have to trade, but then by funding the account to the proper level, these features are unlocked and you can utilize them then even on your demo account. Okay, so these features come from Trading Central, and they cost AvaTrade a good bit of money that we cover for our clients. In order for clients to use them, we just expect that they be serious enough to actually fund their account without even needing to place any trades necessarily. Yeah, some of the features are active without funding, but some of them require some funding of the account. Very good point. All right, so this is Tesla, and here are the one-day candles, which is interesting. Okay, if you already know in your mind maybe, and I'm not saying this should be the case for you, but let's presume you decided based on that signal that Tesla might drop 20%, and the latest headlines about a lot of negative animosity towards Tesla and Elon Musk coming from the left, which were the biggest buyers of electric cars. For the most part, the folks on the right like the gas guzzling vehicles that are cheaper. They're more for drilling and fossil fuels, so they tend not to go for the electric vehicles as much on the right. So those who are praising Elon Musk right now aren't necessarily going to buy his vehicles, at least not in the numbers that those who are more into the green energy initiative tend to buy electric vehicles. So we see that the fundamentals there, and some of the headlines from JP Morgan and some of those headlines that we saw about the deliveries falling to very low levels. So there's a lot of data there as to why that prediction could be a potential accurate prediction, that maybe that signal could be right, that Tesla has some bearish pressure to potentially drop. So if you feel that that's the case, then now we do a little bit of technical analysis. And what I see on the one-day candles is pretty nice if I'm looking for a sell. Here's a support level on the one-day candles from last week. Okay, the price found support in this area, held for 1, 2, 3, 4, 5 days, right? Holding here, not breaking. This was the weekend, I believe, these 2 days. Yeah, this is Saturday, Sunday, so no movement. But here was Friday holding, Thursday, Wednesday, Tuesday, not breaking through this area, holding. Then all of a sudden, look at this price drop, plunged through that price level. Okay, and a lot of times when you break a support level, you get a rapid drop. It's called a breakthrough candle. Then you get a bounce back up because that rapid drop eventually finds the buyers. And the bounce came up and confirmed that this is a new resistance level. And many times with the technical theory of support and resistance, when there's bad news that causes a support level to break here, then if that bad news still exists, it then causes that broken support level to become a resistance level. So whatever caused the price to drop below this support level then keeps it from going back above. And so the support becomes resistance now. And so that classic theory played out here this week. The price came back up and found resistance right at that old support level. So now the prediction is price could drop 19% according to Trading Central. We see headlines, kind of negative news about Tesla from a couple different angles. And so if the market opens today and respects this resistance level and maybe starts a little bit of a downtrend, then maybe you look to sell, okay, with that signal and fundamental news that we read, if that's how you feel about it. And so then in that case, I would probably put my stop loss above the resistance, because if it breaks above that resistance, then something changed with the momentum. Short stop loss and going with the downtrend, maybe with a take profit down towards this week's low or last week's low, okay, down here. And so today is Thursday, this is Wednesday, Tuesday, Monday. So this is Monday's low right here, Monday, Tuesday. So there's support here. So I would have a short stop loss, potentially risk less with a nice resistance level to protect my stop loss, and a take profit where I could make potentially more than I'm risking by a factor of 2 or 3 or 4, depending where the price opens today and where you get in, and maybe take profit without even having to break this week's low. Okay, that would be kind of a scalp type move. So that's how this sets up technically. And it looks like a nice setup if you're buying into the fundamental news and that technical signal that Tesla might drop. And that doesn't stop you from also putting a pending order up here that if Tesla does break above that resistance, maybe there's some good headline that comes unexpected, you could have a pending order up here to buy. So if this does go up and hit your stop loss by breaking above the resistance, you could have a pending order to buy then with a take profit maybe somewhere up at the next resistance level up and the stop loss down below if indeed it did break through and trigger a buy. So you could have a double move there, but doing the market move when the market opens today in the direction that you think the current fundamental news is pushing it. And that's maybe potentially down according to Trading Central's signal. We should have quite a bit of movement, I think, today on the charts. Tomorrow's a somewhat quiet day out of the US with announcements, but there are some big announcements out of the UK and European Union. So I think also tomorrow, leading into the weekend, there could be quite a bit of volatility and trade opportunities. So with the US announcements to come still today and some big announcements out of UK and European Union tomorrow, all of that paired with the trade war fears, I think there'll be a lot of opportunities to trade on. And I think the biggest ones coming up the soonest will be those US announcements that are coming in the next couple hours to keep an eye on. All right, everybody, good luck with your trading. I wish you a lot of success, and I'll be back at it next week with the same webinar schedule, 6 p.m. UK time on Wednesday, 11 a.m. UK time on Thursday. All right, bye for now. Take care.